Good morning and welcome to the opening keynote interview. My name is Charlie Corbett. I'm the editorial director at Euromoney Conferences. Today we are lucky enough to be speaking to Mohamed Farid Saleh, the new chairman of the Egyptian Stock Exchange. Welcome, Mohamed. Welcome.
Thank you.
And congratulations on the new position. How has the first month gone? Should be my first question.
I have to say a bit tiring, and bearing in mind all the challenges that we are facing as an exchange and the challenges that in general the Egyptian economy definitely is going through, and the transformation that is happening given all the reforms, the bold reforms that the government of Egypt have been attempting to do and actually embarked on during the previous months and years. So the previous months mainly. So basically it has been definitely tiring.
So busy. Well, things are going well. I mean, shares are continuing to rally, and importantly, a lot of this rally is being driven by foreign money coming into the country. I mean, I might ask you, what do you think? I mean, you've mentioned the reforms, but what do you think fundamentally is driving this renewed confidence?
We need to bear in mind that usually there is a cycle for investment. I mean, whenever a country conducts significant reforms that we have conducted, and probably you can touch upon later, the first cycle or the first wave of investments that usually come would be in the fixed income, which is the less risky, I would say, type of investments. The second step would be usually investments directed towards listed securities and listed shares. As an exchange, definitely we do not comment on rising prices, because if we comment on rising prices, we will have to comment on declining prices, and that's quite annoying to any exchange to be commenting on this. But what is more important, honestly speaking, is the relative increase in the volume of trading and the value of trading on a daily basis. That is what counts as an exchange.
It's getting those volumes up. That's
yes,
it. That's
yes.
it. And that's liquidity, and that attracts more people to come in. So looking ahead, I mean, a lot of work has been done. The reforms have started, but obviously there's a lot of work to do as well. For you, Mohamed, what are the priorities in 2018? What are your new initiatives, new products? How are you going to make a difference?
Well, the starting point, you need to look at the entire value chain for the capital market. It's not only about a trading platform whereby investors do meet and they can buy shares or stocks or bonds or whatever in the listed market. You need to look at the entire value chain to be able to tackle incrementally every single problem that you get to see in the entire value chain. So you have issues associated with the, I would say, issuing market, or whenever a company would want to issue in the stock market, and the associated, I would say, disclosures and the sufficient level of disclosures associated with this part. And then in the second part of the value chain, you would be talking about new instruments, new trading platforms, new trading aspects that must be added or reinvigorated in the market. And the third area, I would say, of the value chain would be associated with the buy side, which are the investors, whether institutional investors, individual investors in this area. So before delving into the details of any program that we aim at, you need to look at the entire value chain to be able to understand how each step or how each reform in the line of the value chain would impact the entire value chain in this regard. The starting point would be, again, getting back volumes and of trading to some levels that would be relaxing for the issuer whenever they want to come to the market, that there is sufficient trading volume in the market that would allow any placement that is happening in the market to take place easily. At the same time, the main role of an exchange that people, I would say, would need to understand, and probably I shouldn't be convincing the convinced here, but any role of the exchange, the most important one would be the informational efficiency. Once you reach the point whereby every single person is confident that this price has been viewed by plenty of players, supply and demand, and all of them interacted on this. So hence, this information efficiency would induce new players in the market in terms of issuers, and would induce as well the buy side and the sell side in terms of the investors, that this market, this price is reflecting several views and hopefully the fundamentals of the underlying asset that they're looking at.
How far away are you from where you would like to be in terms of this kind of price discovery and volumes?
I think we just started, so there is a long way ahead. Yeah,
a long way to go. Okay, and yeah, what are some of the ways that you're going to, that you can improve these volumes and part of the sort of data and the transparency and that kind of things?
Okay, let's start about the mechanics of trading as a starting point. Definitely. One of the issues that we took probably in the first board meeting at the Egyptian Exchange was reducing the trading hold time. At the Egyptian Exchange, usually whenever there is a price change by increasing or decreasing by the 5%, we used to halt the trading on the stocks by 30 minutes, for 30 minutes,
right,
which was extremely, I would say, long. We conducted a study on international markets. How long do they basically conduct this trading halt? And the first decision that we decided, we're going to have this trading halt timing in this respect. And the market response in this regard was immediately on the positive side. We've seen volumes increasing on that end. Additionally, there has been some regulations, and probably everyone knows here that it's not only about regulations in Egypt, it's all about the implementation. We always have an issue in implementation and implementing the regulations rather than the regulatory frameworks that are present, and we work on them and improve them, but it's all about implementation. We had the regulatory framework for what is called short selling that was present in 2004, amended in 2005, and for whatever reason it wasn't activated. So another aspect that we're aiming at very quickly would be activating the short selling mechanism for trading in this regard.
Sorry, to explain that a bit more, the short selling mechanism does what? It prevents because short selling can do a lot of damage, but it's rules around short selling. I'm not familiar with it, so with the new rules.
Basically, what you're referring to would be something called the naked short selling, whereby the investor would not borrow the stock and would short sell the stock, would sell the stock before even knowing from whom he's going to borrow. And he has to close his position prior to settlement of the stock itself. So basically, the pressure would be around 2 or 3 days. What we're talking about, it's quite different. It is basically covered short selling, whereby you get to borrow the stock prior hand. You sell the stock in the market if you have a certain view regarding the price changes, while borrowing the stock is being conducted through a mechanism where you have a pool of, I would say, lenders of the security that are willing to do this. So in addition to that, the short selling itself has to be conducted on something called an uptick rule. You cannot short sell unless the market is going up or the trade is going up. So the aspects or the risks associated with this, I would say, for the general public is not present as the case for the naked short selling aspect.
Yeah, this is all about reducing the risk.
Exactly, but there is another point that short selling per se, people wouldn't probably grasp this point. You have plenty of investors that are holding their stocks and they wouldn't want to sell it or trade it in the market. By having short selling, you're allowing these investors to lend their securities, which will increase the number of stocks traded in the market.
And then you get volumes up and then
Exactly, to achieve the ultimate target of having significant volume of trading in the market.
And it all helps price discovery and it all helps all of that.
Exactly.
Just looking ahead, I mean, are there any big upcoming listings you're looking forward to? I know that there's the increasing role of the private sector and this could keep you very busy in the future should all the reforms go ahead.
We have some listings that are upcoming in the market. It varies in size. One would be quite significant. The remaining would be in the medium-sized area. However, what is more important, honestly speaking, is the plans conducted by the government and the Ministry of Investment, and that basically there was a new, I would say, entity, a new committee that has been formed with all relevant job descriptions of this committee to foster, I would say, the ownership or the listing of various state-owned enterprises in the stock market. And bear in mind that this approach is not unique. I mean, several countries worldwide, whenever they want to reinvigorate the market, they adopt this approach to increase the visibility of the market, to attract new investors, and to widen the capital base of the companies. Ultimately, state-owned enterprises would require capital increases for expansions that are planning to do, and the platform provided by the stock exchange is quite significant. So this is quite important to see, I would say, the public public listings and offerings of state-owned enterprises in the market. Having said that, it's not only about the capital increase, and it's not only about attracting new investors. Probably everyone here would know that listing in the stock market would require improved disclosure and improved governance when it comes to managing the company itself. So part of the listing requirements on EGX are stipulated, whereby you have to have in your board of directors some independent representatives, you will have to have an auditing committee, you will have to have all the relevant, I would say, most important aspects associated with the corporate governance. So that's another aspect whereby it is democratization of capital, let's put it this way. Whenever you go to the state-owned enterprises being listed in the market, it's a sort of monitoring as well of the performance of the companies.
Of course, and as the UK went through a similar thing in the 1980s, they called it the stakeholder society. So they sold the big infrastructure, and everybody had a share in the telecoms, and that sort of moves us slightly. Well, one more question before we move on, because I want to talk a little bit about the society, EGX, and society as a whole. But just quickly, in terms of your ambitions, in terms of number of companies listed, there's 270 listed companies at the moment. What would you like? How many would you like to see? What's a good number? You know, as many as possible.
Look, honestly speaking, number is irrelevant. I mean, what counts would be the size of the companies, the quality of the companies, and what are they doing when they come to list. The ultimate point, if there are significant companies in terms of sizing and they don't need more capital, then fair enough. The EGX is the place for them to, I would say, as an exit scenario for the various investors. But what is more important, that you want to attract companies with, I would say, an entrepreneurial spirit. You come to list to the market not just for the sake of, I would say, exiting with some shares, but to finance your growth. And that's how you link, I would say, capital markets eventually to the real economy and to the real aspects when it comes to companies. This is what counts more, honestly speaking. Apart from number is an irrelevant figure. It is the quality and the approach that the companies adopt when they come to list at EGX. It's all about growth financing. It's all about financing the growth of companies. It's all about supporting, I would say, the various entrepreneurs on their various, I would say, sizes to finance this growth. And this would enable them to grow as a medium-sized or a small-sized company, to grow and to be large companies, and that's the ultimate role of any exchange.
Well, that's key, and that moves us on to, you know, why the stock exchange is important to the Egyptian people, and how can its relevance be better understood, because you know, this ties into financial inclusion and people's general knowledge of how finance works, and the importance of a stock exchange in terms of, as you've mentioned, alluded to here, is funding small businesses, especially in an environment with high interest rates where it's quite difficult to borrow. So what do you see as your job, your role within society?
Well, probably, again, I don't want to convince the convinced. Financial inclusion is quite important. I believe all studies worldwide has proven that whenever you have proper financial inclusion, and plenty, I would say, of people are using the various types of services, and the services here are not only banking services, you have an entire realm of non-banking services that can be used by the various, I would say, users, among which would be the microfinance, the financial leasing, insurance and microinsurance, capital markets as well is part of it. Probably an area that would be associated with the financial inclusion is the financial literacy. People, and here we need to do a lot of work as an exchange in this regard. People don't understand that the ultimate saving, I would say, vehicle in terms of long-term investments, when you look internationally, I'm not talking about Egypt, but internationally, when you look at the private or the pension funds in general, where do they invest a significant portion of their investments? Part of it would be in the capital markets, given that we're talking about long-term investments of 20, 25 years, 30 years. So the ultimate saving vehicle, rather than being the various, I would say, the different saving schemes, it would be the exchange. So this is a point that plenty of people and plenty of work needs to be conducted from the exchange itself to make people understand you have a saving vehicle here. It's not only about investment, it could be incremental savings that could happen, I would say, in the long term to achieve your target. So that's part associated with the financial literacy that would eventually go to the financial inclusion aspect, that it's not only about adopting the various services provided by the banking or the non-banking financial sector, but as well through the capital markets.
This financial literacy, I mean, how physically, how do you get that message out there? You know, what steps to maybe you need to take, maybe the government needs to take in order to educate people as to not just the rewards but also the risks of
Definitely.
investing.
Yes. I believe we need to have a paradigm shift here. We need to go granular. That's the ultimate point. We can do, I would say, generic reforms. When it comes to the exchange, we can decrease the trading halt time, we can introduce the short selling, and we will introduce, hopefully with the approval definitely of the regulators, derivatives or commodities as they are named here in Egypt, on financials and on commodity, physical commodities eventually. But all of this without having the proper, I would say, communication messages, communication plans to be conducted with the various entities in Egypt and the various individuals, and to go granular and to go to the, I would say, lower level of youth. We are a very young society. So basically, they have hopes and they have plans to hopefully save and invest for a long period of time. And that should help as well to finance the investment saving gap. I mean, for any country, for our country, for Egypt, to grow by the targeted 5.5%, 6% on a sustainable approach, you need to have high investment ratios reaching to the 25% of GDP. And this has to be financed through savings. That's a very important point.
And so that's very low, isn't it?
But not deposits only. It is the saving ratio of the entire economy, and hence, by I would say trying to improve on a granular level the financial literacy aspect, you would be helping indirectly in the entire, I would say. Oh, it likes me. Probably.
He's gone, I think.
It will help, I would say, financing the entire growth aspects of the economy.
So it's kind of, it goes both ways. So you need to work from the bottom up, but then you also need to be, you're also at the same time, your job is to get foreign money in there. You want foreign pension funds, even foreign institutional investors to come in. And how do you make that money sticky? You know, because the great problem is always that you end up with hot money, don't you, in economies of foreign investors panic and they withdraw. You know, how do you convince people to buy into the future of Egypt?
That's a good question, because honestly speaking, we need to understand that we are an open society and an open economy. The moment we start to label money as hot money and sticky money, eventually, if the investor wants to exit, he's allowed to exit, whether this is investments in the T-bills market, T-bonds market, listed equities, even FDIs. If they want to exit, that should be part of the right, and it is part of the right, and that's probably one of the strong, I would say, amendments and new pillars that have been added to the investment law that has been issued recently, among which would be, in case that they want to liquidate, there is a certain number of days that all entities need to mention if this company have any liabilities on it within this number of days. If they don't get a reply, this company is, I would say, allowed to exit the market. But the point, we start labeling money as hot money because eventually hot money has a role in the economy as well. The money that has been being, I would say, funding part of the purchases in the stock market. The money that has been buying the T-bills and T-bonds that have been issued by the government. Eventually this is reducing the burden on the financial sector to finance the budget deficit, and hence it is impacting the interest rate levels. Yes. Sticky or not would depend on the long-term aspects. I mean, think about it this way: we are 100 million. We have a population growth of 2.5 million. Where are we going to go? We're going to stay. We'll need investments. We'll need, I would say, investments in every single aspect. So it is the long-term aspects of the country and the economic reforms that are being conducted. And by the way, an extremely important point that maybe we're missing here. We have been tinkering with the idea of reforms several times in Egypt. It's not the first time to conduct reforms. We tinkered with the idea in 1980s, early 80s, 1991, 1992 with, I would say, a reform plan as well. It was called the AirSAP with the IMF. And then we tinkered again with, I would say, Cairo consensus approach in 2003, 2004. But every single time you didn't resolve, I would say, the problem from its roots. You didn't resolve the issues associated with your budget deficit from its roots. You tinkered with the idea, you worked on the margin, honestly speaking. But this is an important point that needs to be, I would say, communicated to the people. This is the first time with its mistakes. Definitely there will be, I would say, mistakes in implementation on every single front. That's very...
Do you think it's different now? And if you do think this reform is different, why is it different? What is it?
It is definitely different, and the main difference that it's not about, let me phrase it this way, it's not about reducing the budget deficit via alleviating energy subsidies. It is about as well the inefficiencies that have been created in the entire economy from a transportation perspective, from an industrial perspective, and so on and so forth on every single front when it comes to the energy subsidies in this regard. So by tackling the core issues that are impacting the various macroeconomic imbalances that we're seeing and its impact on, I would say, the stock exchange and the real economy, it is very different, and you're taking things from its roots. So that's the main difference. It's not about trying to, I would say, have cosmetics and improve, I would say, reduce the budget deficit via various issues, or improve the aspects associated with monetary policy, or improve the aspects associated with the investment environment. You're really working on the root of the problems in terms of the investment environment. For example, part of it was the one-stop shop that we have been hearing about for ages, and it was partially implemented. But was it fully implemented? Today we can say explicitly that it is fully implemented in terms of you have the entire cycle in one place.
Yes.
This is a part that is very different than used to be what happened before. When it comes to the fiscal policy, it is very different, and you're going to the roots of the problem, not being afraid of, or actually not conducting cosmetics in this regard.
Okay, we've got a couple of minutes left. I wonder if anyone has a quick question, and it'll have to be a very brief question because we haven't got a lot of time. There's someone with a hand up over here. I think there should be a microphone coming round to you, sir, any minute now. If you just give your name and where you're from, and a brief question would be great.
Yeah, my name is Dr. Mohamed Abid from Alexandria University. My question is twofold, if you allow me. The first one is...
As long as they're short, two short
very short,
pieces.
Very short, and to the point. One of which is I'm amazed by the comments mentioned right now about the danger of the hot money. If you would like to elaborate more about how this hot money would help the Egyptian economy. The second question is about what's your vision about solving the problem of liquidity in the Egyptian market right now?
First of all, it is good that you're amazed. So partially we achieved a partial target from this session. Hot money per se is, I don't know how to say it. When you have capital flows, part of the capital flows, and given that you're not a closed economy, the concept of being open to the markets, the concept of being open to different types of investors would necessitate that you accept portfolio flows that are coming to the country. That's a crucial point. Hot money, when it comes to velocity of speed of entry and speed of exit, they are hot in this term of definition. But do they have a role when they come or not? That's what you try to, that's what we're trying to communicate to the various people. Whenever you have portfolio flows in the equity market or in the fixed income market, these portfolio flows support you in some area, some other area. The other area that we're talking about, as simple as it could be, would be funding the budget deficit of the country at lower rates, or at least while providing you with the foreign exchange requirements in this regard. So the point of perceiving any funding flows as hot money and not hot money in itself is a wrong categorization. The ultimate target is you do consistent reforms, you try to reform the economy from its roots, you try to work granular on the problems that you have been facing and the investment issues, and this would attract hot money and FDIs and any type of investments in the country. And given that we are an open economy, a small open economy, you need to be accepting all with its goods and its bads. That's the ultimate point. When it comes to increasing liquidity, again, we're working on the platforms that enable investors to trade in terms of the various, I would say, financial instruments that can be introduced from one hand. We're working extensively on the quality of disclosure of companies by trying to resolve, again, the issue from its roots. We have investor relations people that are responsible at every single company that are listed on exchange. You work with them, again, on a granular basis. These are the practices that you used to do. These are the good practices that needs to be done for domestic and international investors to be, I would say, on a comfort level when it comes to the quality of the disclosure in this regard. We're working on attracting various companies to the market, and again, it's not about the number, it's about the quality of, I would say, and the characteristics of the company being listed. And from the other hand, you're working extensively in the coming period, and we'll be having a significant plan when it comes to financial literacy and financial inclusion.
Thank you very, very much. I'm afraid it feels like the debate's just started, but I'm afraid the time is up. So can I ask everyone to thank Mohamed Farid Saleh so much for coming along and sharing his insights and taking the time to speak to us today.